Good morning, guys, and welcome back to the channel. In this video, we're going to do a recap of the whole week. And despite it's been really a slow week because we took only 3 trades, I want to share with you lessons at the end of the video that I think I will bring with me for a long time. So stay till the end. Let's go. So this week, as I said earlier, it's been very slow. Despite I trade on the 3 minutes, so I'm gonna call myself a low time frame trader. I took only 3 trades, and this is just important because it goes against everything what is taught out there. So it doesn't mean that if you trade a lower time frame system, it means that you have to take trades all the day. Okay, all the days. So this is important because sometimes there is an association from lower time frame traders, a lot of trades during the day. This is not the case. Okay, because the system is always the system, and you have to trade only the setups that the system is going to bring to you. And if the system doesn't bring you, let's say, setup, or the screener doesn't bring you assets that are in a good, let's say, shape, okay, even if it's not the correct term, you do not have to force the trade. So this is important. This is the first lesson, not the one that I want to tell you because that is for the end of the video, but this is another, let's say, bonus lesson that I want to share with you. Lower time frame traders, lower time frame system don't mean a lot of trades, okay? And I want to demonstrate this concept, this with you. So only 2 trades: NBIS and Tesla, okay, and this one on DAX on GER40, okay. Let's start with the stock first. So we have NBIS, okay, and this setup, as you can see, it's always the same. We have a trending market, let's say one-sided market, reaccumulation, one-sided market. Then we have a big push and a pause. And the pause I like because it's clean. The sell-off is clean, okay. And then we have our usual double MB entry. So first break and second break. As you can see, price just break the 20, goes below the 20, then comes back, and the second break is above the 20. This is what I'm looking for currently. There are 1,000 other methods to get position behind the trade, but at the moment we are focusing ourselves on the double MB entry. So I want that the second MB, the second pause, the second buy stoppable entry, buy stoppable pause, you can call it whatever you want. I want the second pause being above the 20, because that's mean for me that if it's above the 20 and the 20 and 10, it's turning upwards. The meaning behind the EMAs turning upwards, it's that they are sustaining the price. So there is a motivation behind my buy stop, and so I want to buy stop when there are these conditions. So the conditions were met and break even. Unfortunately, this was a break even. I'm gonna show you that we made a lot of nothing because we had 36 candles of nothing, but we weren't able to sustain the price, weren't able to sustain itself. There was not enough strength behind the move, and it ended up being a break even. So this has been the first trade of the week. Then we have Tesla, and as you can see, the setup is always the same. So we have a trendy market that in this specific scenario is going out is yes, it's breaking a big stage one, and so right now we are in a stage two. So in a markup, there is the delivery behind the market. There is an institutional, let's say, um, willingness to push price higher. There is interest about institution, about big money, about the real smart money. Then, as you can see, we have a big impulse and a pause, and this pause is very, very, very clean, as you can see. And then we have our double MB. Again, the second MB being above the 10 and 20 that are turning upwards, that are sustaining the price, and I decided to buy stop. This is something that I want to talk to you because I want to share with you. Okay, this is a substantial difference in the setup, let's say. So this one has a cleanest sell-off. This one is a hard sell-off. Okay, so I decided to trade because to take the trade because the setup was clean, but it is infinitely better when we have two candles, when the sell-off is let's say not heavy. Okay, so two candle means that the price is pushing upwards but is somehow slowing down. When we have just one candle that goes directly to the 5 or to the 10, the sell-off is a little bit heavier. And so it's a good setup because it was clean. There was no big wicks at the top, let's say, of the setup. The candle itself was not so big, so it was acceptable as a setup. But it's way better when we have two candles because the sell-off is really less heavy than a setup where we had just one candle. Okay, I just wanted to share with you this thing. Same setup, and it ended up to be a break even again. So as you can see, price just you know goes and then comes back, and you know that I have a real fast break even rules. So as I see price going in my direction, I just put immediately price and move price to break even because sorry, I move stop loss to break even because usually when the in these kind of setups, when the price is about to go, it doesn't come back. So there is really no meaning for me, no reason for me to not put my stop loss to break even as soon as possible because I want to protect my trades. And since these are setups, are faster setups, so when if price want to go, it just goes and doesn't come back. So for me, has a reason. No, there is a reason behind moving so early this stop loss to break even, and it ended up a break even, and it happens because at the end of the day, the most important thing is that the setup are always the same. As you can see, the setup for me are always the same. There are little differences in the setups, but at the end of the day, the concept is always there. Trending market, big push and a pause, and a double MB entry, with the second MB being above the 20. Yeah, this is, let's say, the overall concept behind my trades. And yeah, I have to accept that a lot of time my trades will be break even and losses. It is what it is. Okay, so this one is the DAX trade, and here you have the lesson because this was a mistake. I always said in the videos that you need to be consistent in the setup you trade, that you need to trade always the same setup because the consistency in taking the same setup is what lead leads you to success. And this was my fault because this setup was not, like, let's call it an A plus setup. Okay. This was the first trade that I took in the lower time frame forex environment, because if you saw the last video, I just announced that I was moving from the higher time frame to the lower time frame in the forex, and this was the first trade. I'm going to show you that the setup, the overall setup, it's not like the others. Okay. And this was really a mistake, and I want to show you that there are two mistakes in this trade. The first one is, this is not a trending market. Okay. I had this line, this virtual line in place, because that line had to show me where the accumulation finished. And so as long as price is, let's say, on the other side of that line, I was willing to take the risk and to take the trade. But first mistake, that line was a mistake, because I could have put this line here, above here. It was more conservative. It was better from a point of view accumulation, because there are orders that I didn't, take in consideration when putting this line. At the end of the day, this line is where the majority of orders reside. So I just wanted to trade, and that is the mistake. I just wanted to trade. I just lowered, let's say, the line, because that way I was with the actual price, I was on the other side, and I thought that this was a good trade. But this was the first mistake. But the biggest mistake is here. And is here because, as you can see, the sell-off is not clean. We have a lot of wicks. There is barely a sell-off because price, as you can see, is going sideways. There is no our classic setup where price goes. There is just the push, and then price pause and comes back to the 10, sorry, 5, 10, and 20, and look, it's better to show than to try to explain. Look at this sell-off. Look at this sell-off. There is no sell-off here. Okay. If we take the other trade, look at this sell-off. Look at this sell-off. They are completely different. Okay. So that was the big mistake. So this was a mistake, but this was the biggest one, because despite I, made a mistake in putting the line, I had another chance to save myself, choosing the right setup. And I failed again. And this is why this is the biggest mistake, because the setup was not the same. And I've been punished for that. So this was the lesson that I want to bring to you. I always say that you need to be consistent in the setup you take, and I wasn't consistent. So this is really, really, really important. Never force trade. Never, let's say, this was not FOMO, but we can let's say, we can say that this was a FOMO trade. I wanted to trade. I wanted to scale the account, and I made two beginner mistakes. The first is the line. The price here, you can see it's not in a clear stage 2. It's in a clear stage 1. But I wanted to trade, so I found a way, let's say, to give me a chance to take this setup. Okay, but this was not the right environment. And the second mistake is the setup. The pause was not a sell-off. There was not a sell-off. There was barely something. In fact, price tapped me in and instantly went against me. And yeah, this was a big lesson for me, because I still make mistakes, guys. And in the lessons that was a bad lessons for me, there is also good lessons, because you will be doing mistakes. You will be take bad decisions, even if you have a profitable system and you are a profitable trader. Maybe the more profitable you begin, the less mistakes you make, but there is always the mistake, behind the corner. So you have to accept, because we are human, we need to learn. Sometimes, even if it's bad, it's a bad thing, emotion, go in the way. But yeah, this was a mistake. And for sure, this will be a lessons for the next trades. And I wanted to share with you this one, because I am the one that always say that you have to be consistent, and I'm at the same time the one that made that mistake. So this is just to show you that it doesn't matter your level of trading, your level of profitability, your level of consistency, the mistakes, are always there. Okay, and you have to accept that sometimes you will be taking bad decisions. But the most important thing is that those bad decisions doesn't affect your trading, your way of thinking. Just recognize that that was a mistake, and that you have to do better in the next session, in the next days, and stop. Make the mistake, forget the mistake, and go on. This is the most important thing that I want to share with you. Okay, from one side, the lessons that I took, the mistake itself. From the other side, what that mistake is. It's just a mistake. You will be doing mistakes, and you have to accept it. Okay? Thank you for being with me, guys. Please subscribe to the channel if you like what you're doing, not for the subscribe itself, but just because it means that you are, loving my video, loving the content. I'm trying to be as honest as possible with you. I'm trying to do something that no one does, okay, on the internet. I'm just showing you everything, and that would somehow show me your appreciation, and that I need, okay, to bring more contents like this. So try and hit, the like button, but the most important thing is just stay with me on the Telegram to see, the real action on a daily basis. Thank you guys for being with me, and with this format we are going to see next week for another recap. Thank you again.